The Banking Scene Director's Cut goes behind the scenes, sharing stories and insights to help you build the bank of tomorrow.
Welcome to today's version of the Banking Scene Director's Cut, where we have Martijn de Ruijter, who is head of SEPA Payments at Rabobank in the Netherlands. And today we're going to be digging into a little bit of fraud in our ongoing investigations and research for our fraud white paper. And Martijn, we actually had a webinar yesterday where we were discussing an early preview version of the white paper. And one of the burning issues that keeps on coming up during this is related to instant payments regulation and verification of payee. So to kick off and dive straight in, I want to know, have you seen a clear impact, like some form of reduction in certain fraud or increase in certain fraud, as a result of either or both IPR or VOP? Nothing like throwing you with the first question right on something like that.
All right. Thank you, Andrew, and good morning, and thank you for this invitation. It's an interesting question, and I think what's perhaps more interesting that in the Netherlands, we've already had instant payments for private customers for a while, for a couple of years now. So basically what we've already seen the effect for a couple of years, which makes it probably even stronger evidence in terms of what's happening.
Yeah.
So what we could clearly see, and Rabobank was one of the front runners in early VOP or IBAN naamcheck, as we called it back then.
Yeah.
What we clearly saw is a shift in terms of the tooling or the measure being quite effective, most notably in invoice fraud fighting. So we saw a remarkable drop in invoice fraud. The interesting thing was at the same time, we saw a remarkable increase in invoice fraud based on European IBANs instead of Dutch IBANs. And that is the nature of fraud in a nutshell, I would say. Once you find a leak and you plug it, criminals will find a way to work around it. And that basically was what happened here as well.
And actually, it was interesting that you picked up on invoice fraud, because on an earlier webinar, one of our attendees had said for them, and they are Belgian-based, invoice fraud has increased substantially because the fraudsters have discovered that the onboarding process to get into the PEPL network in Belgium is maybe not as robust as it should be. And now they are creating fake mule accounts to mimic companies and then sending fake invoices across the PEPL network. Are you seeing anything like that when you said you saw an increase of invoice fraud across Europe?
Well, not necessarily on the same dynamics or the same mechanics, I would say. But the point would be similar, I would say. So once you find a leak and you plug it, they will work around it. And this is also, in my view, fraud and combating fraud is a complex system. And by definition, you can't fix complex systems with golden bullets. There's no single way to treat fraud or to fight against fraudsters or their innovations. So what we will be needing as a sector in the coming years, and perhaps always, is a layered approach. So you need all these layers of protection, very specific measures such as VOP, but also more generic measures such as the daily payment limit, social engineering, working together with telcos, etc. This is all needed in sync together. Otherwise, it won't do any good.
And I'll pick up on the broader PSU ecosystem in a second, actually, because that rolls into my next line of questioning. But before we get on to that, do you have any specific metrics that you use? You don't have to quote them to me, but do you have a specific set of metrics where you can track, okay, we think fraud has increased or decreased because of this? Can you actually do that correlation, or is fraud so complex that it is just simply like, that old childhood story of putting the finger in the dike where it's leaking at the moment?
It's probably somewhere in between. We have a lot of management information in terms of what's happening, so we can do these analyses and we can spot the trends. What we then do is combine this with actual intelligence, in the sense of having people in the networks talking to the Justice Department, to police, to other banks, to telcos, in the sense of what do you see going on? And then together with those two data points, we will usually do a deep dive into we think this is happening. So let's pick up 10 cases, 15 cases and see whether they share certain characteristics. And then usually we can draw some conclusion in terms of we really need to focus on this type of fraud or this MO or this entry point. So that's probably the one version. The other version would be if it's very specific in its mechanics. For instance, a while ago we saw a strong rise in what we call online scams. So basically buying a non-existent product online, and we saw a strong increase from certain geographical locations at the same time. So hundreds basically of cases being reported from the same geographic location, and that will allow us to more quickly move towards stronger detection measures, upping the threshold for fraud detection, etc. Specifically on those mechanics.
And on that note, on the online scams and things like that, APP, so authorized push payment fraud, is still one of the biggest metrics. I know that here in the UK, that's one of the biggest fraud typologies that there are. Have the fraudsters, you said that the fraudsters are very quick to adapt to the minute you do something. How have the fraudsters adapted to verification of payee? Have you found that, they're coaching their potential victims to ignore the red light and say, "Oh no, you'll get this," and how are you tackling that from your alerts and warnings to the consumer side? Have you changed anything that you've been doing to be able to warn the consumers, look, this doesn't match, so don't go ahead with it? What have you done?
This is one of the key questions in fighting fraud right now, I would say. And the problem is once a criminal gets into the mind or a trusted position with the PSU, there's very little you can do, to be very honest, in the sense of having warnings or signals or flags, in my view, is very limited in its effectiveness, basically because it's already too late.
Hmm.
The payer is already decided to trust the person on the phone and will probably listen to whatever the person is saying, specifically because their stories are usually tailored to something like your bank is compromised and it will show you fake warning messages once you log in, which is exactly obviously what's going on. And in that sense, they're very, very adaptive or reactive, that whatever message we will put on also in the future probably will be preempted by a notion. Once you log in, you will see this message. Don't worry, it's a fake message because your bank has been compromised. So
Oh
basically,
my
what I'm
goodness.
saying is we're already too late if you're at that stage. So the real effective fighting of APP scams is before that point. So at some point, being able to either educate your consumers in terms of who should you trust, who should you pick up, and who should you kill the connection with right away,
Yeah.
or during the start of the process, make it a lot harder for the consumer to execute on these actions, for instance, by having a daily payment limit with a cooldown, to allow for enough time, because usually these criminals use pressure, um, um,
Yeah,
um, all kinds of
urgency, authority, that
urgency,
kind of thing.
exactly. And all people, everyone needs some time to regain their senses and think for a second, okay, but this might not be right. And building into our processes enough delay on the right type of transactions that we really want to protect to have a regain your senses moment.
Mhm.
That's where the magic is, probably.
And I'm going to loop back to our original conversation, but seeing that you're talking about cooling off periods at the moment, of course, there's there's the risk that you might be alienating the customer because
Mm.
customers are being conditioned that they can do everything fast. They want everything fast. Instant payments is all about instant gratification, that kind of a thing. Um, uh, do you think that the customers understand why those things are necessary, or potentially will they see them as a limitation and go, actually, I'm going to move from Rabobank. I'm getting too frustrated. Every time I try and do something, they put the friction. It's very hard for you to balance that friction. How do you go about trying to balance speed, convenience, friction, cooling off periods? What do they call it? appropriate friction at the right time?
I think this is an excellent question. So there's a number of ways to approach this. First is different consumers have different needs. So we do see a strong population that is actually looking for a bank that focuses on protecting their funds and protecting their, uh, themselves or their behavior or their loved ones, their funds. So there's a certain segment that will be served specifically by these type of measures.
Mhm.
Then at the same time, there is, for instance, on new competitor banks, online banks, you see this approach, which is much faster. So less friction, more responsibility towards the consumer themselves. And this is a challenge. So finding where the sweet spot is in terms of how much protection do we offer to which group of consumers versus how much opt-out functionality do we want to offer. Because this group, if opt-out is the default setting, or at least can be used, then the protection measure will become useless.
Yes.
Because that's the entire point. You will be under the influence of a criminal at that point in time, and you will opt out because he will tell you to do, or he or she will tell you to do so. What we do see, and I think that's another way to approach this, what we should do better as a sector is explain the effectiveness of these measures. When we introduced the daily payment limit a couple of years ago, we saw a very strong drop in fraud numbers, uh, specifically for the fraud types that were being reimbursed by banks and
Yeah.
which therefore were being targeted or used by criminals because that's where the easiest money was to be gained. But we saw drops of up to 50 to 70%, so 50 to 70% in
Mhm.
terms of these numbers. So explaining that, yes, it's annoying that you want to pay your home contractor and you have to wait for 4 hours. Perhaps you have to wait till the next day if you want to do this payment late at night. But you're also very instrumental in helping to protect other consumers who are not as savvy as you are. And this really fits into the mission that we have as a cooperative bank. So we
Mhm.
are here to help each other. But we can do a better job in explaining that.
And that explanation, does that involve humans or is that part of the automated process? Reason why I asked the question, my wife had to make a fairly large payment. We had a bathroom renovation and we had paid incremental payments along the way, and then it was the final payment. And when it came to the final payment, the transaction got blocked and she was phoned by her bank. Her bank took 30 minutes on the phone with her. Now, she was not at all worried or frustrated about that because, of course, I'm always banging on about fraud protection, everything. And she was really appreciative, but they went into very a lot of detail to make sure that this was not a scam payment. And she said, look, if you go back on my transaction history, this date I paid them this date I paid them. It genuine. I can show you photos of my bathroom. And the lady on the other side was really cool. But when she got off they authorized the payment at the end of it. They were satisfied and they said, look, we hope you understand this is for your protection. And she said, yes, I do. Actually, my husband works in financial services and you're doing a great job. But what was astonishing for me is they gave up 30 minutes of their time on a single customer. I cannot imagine how that scales unless they have got a massive fraud fighting team. How do you guys handle it? Is it people? Is it AI? Is it a mix of the two? How do you handle that, helping the customer through to try and reduce the risk? You can't eliminate the risk of fraudulent, but how do you do it?
I think right now it's mostly people based, also because there's a very strong need at that point in time for explanation and actual human touch, literally,
Yes.
in terms of being heard, being having this time and space to explain. So it's mostly human right now, and you're right, that doesn't really scale. So we have to choose in terms of which customers, which cases do we protect, to what extent.
Mhm.
Um, by the way, it's funny that you asked this question in terms of if, is it human? Because the problem we run into as well, or ran into, is that once we actually phone our own customers, they don't trust that it's us. Because we've been warning them not to trust any strangers on the phone who say that they're your bank. So in one way, it's a very effective, apparently, education campaign. And so in the Netherlands, I think most banks now, Rabobank as well, we have solved this by having this in-app live notification. So if we
Yes.
phone you and you don't trust it, you can open up your secure environment and it will display right away whether you are being contacted at this moment by your bank. So that is one way to at least establish the secure or trusted connection with our own consumers or customers.
No, that's a very good point, because I know also that in the Netherlands, one of the biggest fraud typologies is the help desk fraud, when somebody has been scammed and then they allegedly get phoned by their bank and then they get rescammed because it's not actually their bank. So I can understand the consumer trust or lack of trust element there. But you did mention before we got into the cooling off period, the need to, what I've discovered people in the industry are calling shift left in your fraud prevention. So start your fraud prevention tactics before it actually ends up being a transaction. So move earlier up the fraud chain. Now, the PSU ecosystem is very broad, marketplaces, telcos, social media networks. What role do you think they could play in this, to be able to help? How should we be collaborating with them? What could and should they be doing?
I think there's two aspects to this. So one is their own responsibility. And I think that is quite similar to the responsibility that we now have or take or have been given as financial institutions, which basically is educate your customers in terms of what they should or shouldn't do. And secondly, have your own detection or forms of detection in place in terms of anomalies. So so in the Netherlands, we have a frequently used second-hand sales site called Marketplace.
Mhm.
Um, m- I'm pretty sure Marketplace has the data to profile my own expenses on Marketplace and then determine which is an anomaly. If I usually buy stuff that's in the range of 200-300 euros and I suddenly buy something that's 10,000 euros, maybe from an account that didn't exist before yesterday, that could trigger. That's basically what we're doing. This is fraud detection. And they could do it to a certain extent themselves. So, both in terms of education and detection. So, that would be my first angle of approach. And the second is sharing of data. So, right now, we are not allowed, or at least we, in all forms, share very little data between chain partners. So, there's qualitative discussions or sharing of trends and insights, but there's very limited, also based on GDPR requirements, very limited sharing of case data, actual names, numbers, account numbers, etc. Once we are allowed as an ecosystem to share much more, obviously within the guardrails of appropriate privacy rules, that would really make a meaningful difference, because that would make it much easier to prevent the same thing from happening again, or the same person to just use a different entry point with the same systematic.
Now, you mentioned GDPR. I was going to ask you what's the biggest barrier to collaboration today, and GDPR keeps on being brought up with that. Um, one of our roundtable dinners, one of the participants said, the only way we are going to solve this if it is mandated by the regulator to share information, because the compliance departments all just go GDPR, can't share. What's your how do you think? Do you think regulation is the answer, that it's going to take a change in regulation before we all start doing this? Is there possibly an industry group that can lobby for this change? How do we break the cycle? Because no matter which of the regions I speak to, they all say the same thing. We need to be collaborating. And then they go, but our compliance department says no.
So I think there's three reasons why any ecosystem actor would collaborate. So the first is out of intrinsic motivation. So sometimes there's ecosystem players who really want to collaborate. Secondly, they will collaborate if they have to. So that's the regulatory angle. If it's
Mhm.
mandatory to do so, they will probably do so to some extent. But more importantly, and this is also one of the key items in upcoming legislation, such as the PSR and PSD3, is damages. Who will need to pay? And this is the exact point. Like, for now, banks have been the target for at least the most of the reimbursement policies, either voluntary, such as in the Netherlands. We have, on top of the regulatory framework for reimbursements, we have something called the leniency approach or agreement,
Mhm.
in which we say we will uh, basically reimburse additional types of fraud because we feel it's important to maintain the trust in the financial system. But in my view, and that's perhaps a bit of a negative view of human behavior, but if you are forced to collaborate, you can still do it in many ways. You can do it willingly, you can do it very well, you can just do the bare minimum. And I think the key to making the collaboration actually work is when the damage is already, or the pain is actually being felt in the wallets of these ecosystem players. So I'm not sure how to do that or what would be a fair distribution of damages. But being liable, having skin in the game, is something that we absolutely need, in my view.
There was another comment where somebody said, there is no such thing as payment fraud. It is all fraud that ends in a payment.
Exactly. Yeah.
And that was something that I went, you're right. There's no payment fraud. That's just not a thing. The consumer is manipulated in one way or another, but actually, putting the blame on the banks, which it has been for years, is an unfair allegation. I'm going to switch directly to SEPA now because you are head of SEPA Payments, and another one of the comments was instant payments equals instant fraud, and the comment was related to the fact that previous frictions that were in place across the 36 member countries of the SEPA Payments, the ecosystem, have now been removed. And of course, money travels within seconds, can be converted, crypto sandwiches, fiat goes onto a crypto rail, gets broken, it gets off-ramped somewhere else. And I've also heard that SEPA Direct is a bit of a major pain point because fraudsters can maybe initiate unauthorized pulls from accounts as well if they've just got the customer's IBAN number. Have you got anything? Do you think that the SEPA framework has made fraud prevention easier or has it made it harder?
If I had to choose, it probably made it a little bit harder, I would say. Then again, we have had some experience with instant payments for a while now in the Netherlands. And I think the statement instant payment equals instant fraud mainly relates to the chances of retrieving the funds once they're gone.
Yes.
Because obviously, if you're waiting for a cutoff moment and the funds are still in their original financial institution or CSM or wherever they're waiting, we have a chance to pull them back.
Yes.
Once they're gone in 10 seconds, they're going to be gone because they'll probably be moving on to 50, 60 accounts.
That's it.
By example. And at the same time, I think the more impactful part of the IPR for instant payments or the SEPA rulebook would be, can we hold on to transactions to check them and then release? Or do we need to reject them? Because that will cause more friction for our customers in terms of having to initiate the payment is more troublesome than having it frozen for a while, then being contacted by your bank, and then having the payment released. So that's a part of the dynamic. It's interesting that you mentioned direct debit. We have also been monitoring the developments in direct debit fraud for a while now, and I think luckily it's not that easy to commit fraud. It's not just if you now have my IBAN, you can't pull the direct debit right now. And that's mainly because in the rule book or the way the scheme is set up, the bank that will allow you to use the product to pull the funds will need and is supposed to have proper checks and balances in place in terms of your credibility, your trustworthiness, whether you should be allowed a contract, and then how much the limit should be, and then checking on the mandates being in place. So if everyone would follow the rule book, and this is a big if, that would mean that the checks and balances are in place at the initiating bank.
Yeah.
But they need to be checked, etc., and they need to be monitored.
And that's possibly where there's a weakness at the moment, that fraudsters might find a weak route in and be able to find an institution that isn't so compliant on its checks and balances.
Yes, and at the same time, if I can add one more thing, in the direct debit scheme, customers are pretty well protected. So there's multiple ways to revert or cancel or change your initial payment. So once it's pooled, there's multiple ways to cancel that from a customer perspective. So the damages would in that case be with the financial institution who initiated or allowed the initiation of the direct debit in the first place. So there is, I think the scheme is properly designed in terms of checks and balances. I also think it's designed to allow for very frictionless pool payments on a large scale. So that's what it's meant for, and that by definition introduces some form of weaknesses or less strong points compared to a regular SEPA credit transfer or a payment request, because by definition the payment flow will be a little bit different.
Martijn, I've run out of time and I don't want to make you late for your next meeting. I could have carried on with loads more questions. Thank you very much for a super informative interview. And I look forward to our paths crossing again soon.
Thank you, Andrew.